Hey there, this week's Week in Review's got it all. We've got political, we've got economic, we've got market headlines, so be sure to tune in. Hey there, I'm Justin Castelli, and this is your All About Your Benjamins weekly mixtape and Week in Review video. We've got a lot to cover, going to try to keep it very high level so we can get through these things very quickly and keep this video short. Unlike the last few weeks, we've got a lot of headlines. We've got political, we've got economic, and we've got some market headlines. I've got a little commentary at the end, so let's get into this right away. So let's start with the economic. Fourth quarter growth came in at 2.6%, so it was a good end to the year, and actually was one of the best years since the end of the Great Financial Crisis, which you may hear people call the GFC. So a good year last year when it comes to economic growth. We'll see how this continues. The beginning of the year is not looking too bad as well. Early in the week, Federal Chairman Powell announced that the Federal Reserve was in no hurry to raise rates or make any decisions, continuing to fall back on using data to help them make their decisions. And they consistently use the word patient and data to let us all know that they're not having any preset decisions made, or at least not letting us know that regardless if they do or not. So they're keeping the language a lot more soft to keep the investment world happy and Wall Street happy. And the markets didn't kind of react too much to that, so that was a good thing. Personal income was down 0.1% in January, and personal income includes all of our pre-tax income, so that's wages, salary, investment income. And to give you a benchmark, in December it was actually up 1%. So we went from up 1 to down 0.1%, and it's being attributed to lower dividend income and lower farm income. So it's believed that these are one-offs, and we should see things pick back up in January, but we'll have to wait in February. I can't believe it's already March. Things will pick back up in February. Those are just one-time things, and we'll move forward. But it's worth looking at because it is a metric that we've talked about a lot as far as wages going up and inflation in the Fed. So January's personal income basically was flat when you take into consideration some dividend income going down and farm income. Now let's move to the political landscape, and we're going to skip the testimony and the sideshow that was going on earlier this week and just talk about one thing. We were over and had a meeting with North Korea that did not go very well, so apparently the lunch just kind of ended abruptly. Food was still on the plate. The whole point was the talk was about nuclear arms, obviously, and the hope was that North Korea would slow down or stop even their nuclear programs. Didn't really get anywhere. The one positive is that both sides appear to be willing to future talks, so it's not like this is done, but there's no news that came out of that other than apparently we just got up and left and stormed out is what the narrative is. But nonetheless, nothing went on. Lunch remained on the table, and we wasted some food, but nothing happened. Let's go to the markets. Last week, I think I jinxed us. I mentioned that after last week we were up 9 weeks in a row to start the year, and this week we went down a little bit. Not a big deal. We did not go down significantly, but I have to admit that I may have been the jinx, so I apologize to all the investors out there. But this week the market was slightly down. Not a big deal at all. I want to throw something out there related to investing. It's not anything that's going to take place overnight, but just to be aware of. There is a company that is, MSCI is the name of the company. They have a very famous benchmark that is used for a lot of index funds or other mutual funds out there that they try to mirror or try to beat this index. So I bring this up because they're going to be increasing, they're actually going to be quadrupling their exposure to China and their benchmark. So again, this is not going to happen overnight, but you'll see that there will become more China exposure, more companies in the benchmark in mainland China. Is that a big deal or not? Depends on your investment philosophy, but it's worth noting that there's going to be more China exposure. I do want to take a second and give a shout out to my friend Perth Toll. If you are more interested in directing your dollars in certain places and rewarding countries and companies that are doing good things in your eyes, then she has an index that she's created, and there will be an ETF later this year. So not a recommendation, but if you're interested in maybe investing in emerging markets and overseas without having China, knowing there's going to be more China exposure coming in because of your beliefs and not wanting to invest in that area, her Freedom Index will become an ETF later this year. I'll link down below to my podcast with her so you can check that all out. But a pretty cool index, a pretty cool thing she has going on. And since we're talking about MSCI increasing China, you may not want any China exposure, and if so, there are options out there, and a great one coming up, I think, from my friend Perth. So if you're interested in learning more about that, check that podcast episode out. I'll have a link down below. Now, I don't like to talk a lot about individual stocks, obviously not giving any stock recommendations, but there is an exciting year ahead of us, it looks like, in the IPO market. So Lyft, the competitor to Uber, filed its IPO paperwork, meaning it's going to be coming to market to be able to purchase these shares. That's going to be leading the way for a lot of other companies like Slack, Peloton. Uber is supposed to be coming public as well. So there are a lot of companies that are slated to come public this year, which will make it exciting on CNBC. There'll be a lot of conversation. Caution when you go into investing in IPO. You only need to look no further than Snap a couple years ago. And what happened with that. Now, not every IPO is bad, but it's a much riskier situation. These companies are coming in with high valuations. I think Lyft the last valuation was $15 billion, and it's believed to be more than that now. This is, again, another company that doesn't even own the cars that they're going. So it will be exciting if you like to follow the stock market. Again, be cautious if you are going to try to invest in these IPOs. Consult your financial plan, talk to your financial advisor, see if it makes sense. I'm not saying don't do it, but just do it cautiously and be careful and be prepared for maybe nothing to happen. And then finally, Tesla announced that it is closing its showroom stores. So we actually have one of these in Indianapolis, but they're going to be closing those to move all the way online sales in order to offer their Model 3 at $35,000, which is the price tag that Elon Musk said he had hoped to be able to offer when they first came out with the Model 3. So Tesla shareholders, they have their opinions on that, but I will say, Tesla, you have my attention at that price point. I just don't know if the Model 3 is big enough for a family with 3 boys. But I love the car, I love the technology, I love the company, maybe not the stock, but we'll definitely be keeping an eye on that and see what those numbers look like and what happens with Tesla as they close down these stores. And finally, moving away from market, there's going to be a couple posts down below on the Mixtape. So if you're watching this on YouTube, head on over to allaboutyourbenjamins.com. If you're listening to this on Sunday morning, thanks for listening. Head over to All About Your Benjamins and check these Mixtape articles out. But there are a couple Mixtape articles about the phone and getting rid of the phone and kind of removing ourselves from being a slave to the iPhone or Android or whatever it is that you have. And I'm as guilty as the next person of spending too much time on social media, mainly Twitter. That's where I get my news, that's where I interact with my friends across the country and the profession. But I will say that I've noticed a significant improvement in quality time with my family since I took Twitter off my phone. So just check those articles out. I am guilty, so I've read those and I've made some changes in my way to not spend as much time on social media, especially while the boys are awake, spending more time with family. And the reason I bring this up is financial planning, financial advice is much more than just money. It's much more than the finances and numbers. It's about trying to create a overall high quality of life, and I think that family is one of the biggest factors in that, and that is something that we can actually control. We can't control the politics and the markets and all those other things that we worry about with our financial plan, but we can control the quality time that we spend in our family, the things that we do within the activities that bring us the greatest value, and the phone is getting in the way of that. So check those out. One of them is pretty funny. The other one actually has some tips of somebody who went through without it. So check those out. I'll get off my soapbox now, but I think that is a way that we can improve our financial plan, our quality of life without having to have to deal with any numbers or making any sacrifices beyond some screen time. So that is it for this week's Week in Review video. Be sure to check the Mixtape down below. Again, if you're watching on YouTube, if you're listening on Amazon, come on over to allaboutyourbenjamins.com. Check those out. Some great posts on there as well beyond the ones about the phone. And while you're there, be sure to subscribe to the YouTube channel, to the Amazon device. Go ahead and check out the podcast as well. Feel free to leave me any feedback. Let me know if there's anything that you want to see or hear. I want to make sure that you guys are enjoying this as much as I'm enjoying doing it. So with that, thanks for watching, and I will see you in the next episode.